If you are looking to retire and make a lot of money in retirement, then you should look no further than the wheel strategy and Robinhood stock. In today's video, I'm going to be analyzing Robinhood stock and telling you why this is a very good stock to own for the long term. As you can see here, over the last 6 months, it's up almost 200%, which is absolutely insane amount of money to make. However, because Robinhood stock has jumped up so much, I believe this stock is going to have more stability and be one of the best stocks that you can use for a wheel strategy. So I'll be discussing the step-by-step process that you should be doing to generate income and run the wheel strategy. Now, before I jump in, just know I'm not a financial advisor, I'm not a tax advisor, and this is just for educational purposes only. I've been trading for a very long time, and I've scaled my portfolio to $4 million, but of course there's always risks. And I'll talk about some of the risks in this video. Now let's discuss Robinhood stock first. Well, there's 3 primary monetization pillars for Robinhood, and I'm always trying to analyze a business before I run the wheel strategy on it. The first is transaction-based revenue, which comes from options, cryptos, and equities. The second is net interest, which comes from margin, securities lending, and cash sweep. And number 3 is subscription, which is basically Robinhood Gold, credit card, and advisory. So in Q2 2025, transaction revenue rose 65% year over year. Net interest income plus 25%, and subscription and others was 33%. I'm very bullish on Robinhood primarily because I personally use it, a lot of my students use it, and Robinhood is growing their customer base and they're giving legacy brokers a real run for their money. A legacy brokers like Charles Schwab, Fidelity, or Interactive Brokers. Now, Robinhood transaction-based revenue is very, very stable and growing. Net interest is also doing very well. And subscription is very interesting because Robinhood Gold only costs like $5, right? I've been having Robinhood Gold for a very long time. I think it's $5, maybe it's $10 now. But Robinhood Gold subscription is incredibly strong because once someone is even paying $5, it automatically makes them a client. Once you're a client and not just a free user, then you become entrenched in the ecosystem of Robinhood. So Robinhood stock has gone up tremendously because investors understand that the subscriptions that Robinhood has means that they're going to make even more transaction-based revenue. So when you're running the wheel strategy, and I'm going to show you a trade in just a moment, you want to be positive on the business because when you're managing the wheel strategy, it's incredibly easy to manage as long as you like the underlying stock. Robinhood ships mobile-first experience very quickly. This is also a huge benefit because they're incredibly user-friendly. That's another reason that the business is very strong. They also have a very strong cross-sell design. Robinhood Gold also goes to cash sweep APY, right? And then that goes to an IRA match. So now they're offering IRA match, they're offering credit card, and they're offering advisory. Each product that expands, this is basically creating more average revenue per user. So this is a very important metric that I personally look at because it's not just about customer acquisition, it's also about keeping those customers happy and making sure that you make more money per customer. There's 2 sides of the equation for Robinhood. First of all, it's acquiring a customer, which is cost of acquisition, and it's average revenue per user. How much money can you make off of that user? Now, let's go into an actual trade on Robinhood and how I would be using the wheel strategy to basically get into Robinhood and then generate income once I do get assigned. So keep in mind, the wheel strategy is just a simple process of selling put options to get in, and then once assigned, you sell covered calls to generate income. I have been doing this for literally over 8 years. I've been trading for over 10 years. I've been coaching for 6 years. I have the best community when it comes to generating income and the best strategy that I've personally found in my life from working at Goldman Sachs, from going to hedge fund to other hedge fund, from talking to financial advisors. I'm not a financial advisor, but I've worked with them. I've talked to them. I've met so many of them during my education. And nothing actually is better than the wheel strategy. Literally, whoever I talk to, if you want to generate passive consistent income, honestly, in my opinion, there is no better strategy than the wheel. It's a system, it's a process, it's simple, and it's very, very scalable. I currently have a $320,000 position on Robinhood myself, and I'm up a lot on Robinhood. Now, I have covered calls on this position that are in the money, but that is a little bit besides the point. Although I'm making money on both of these positions, this video is about the wheel. So how do we run the wheel? Well, you would go to trade options, and basically you want to start off by selling a put option. I usually sell put options that are 30 days out. So for me, when I go out about 30 days, that is pretty much the ideal because you don't really want to manage the strategy too much. If you like the underlying stock, and Robinhood, obviously I do for a number of reasons, and I'll talk about some more in just a moment. But if you like the stock, you don't really have to do anything. Once you sell a put option, you are good. Just chill. Don't do anything. And that's the best part. Because when you sell a put option that's out of the money, for example, Robinhood's at 145, why would you buy it for 145? Like literally, like why? Why would you buy it for the current price when you can get paid to buy it for cheaper? Like that's the wheel strategy. It greatly reduces risk. It's income and it's just amazing. So you can go a little bit higher on the delta, especially if you want to get assigned, right? So we want to get assigned. We don't mind. So with Robinhood, when we sell this put option, we're okay to get assigned. Like that is a perfectly good scenario. So here the delta is 0.37. And if we sell this put option, all we have to do, I know this is going to be really hard, but sit on your hands. That's it. Just sit on your hands and relax. So if the stock stays above 140, that's fine. You get this premium. If it goes below 140, there's no real need to manage it. You just get assigned. And then once you are assigned, you will have 100 shares per contract that you sell, right? Each option is 100 shares. So if you sell one contract here, well, then you'll get assigned 100 shares if Robinhood's below 140 at expiration. And as soon as you're like assigned, all you have to do now is go into the second step of the wheel strategy, which is just sell covered calls, okay? So you can sell covered calls. And because Robinhood is a good stock, like again, this company has so many things going for it. Like in terms of like their access, they have 24 hours a day trading, which is kind of like diabolical because they're actually making like users addicted to trading and staying on their platform. This is really strong in terms of like the average revenue per user because the more time they spend, then that means they trade more, which is more transaction fees for Robinhood, and then they end up getting a gold membership, which just solidifies a subscription for them. Even though it's a cheap subscription, they still end up adopting more products and being very, very loyal to Robinhood. And then over time, they add more money, so your account grows, and then Robinhood just makes a ton of money off of you. That's why when you get assigned shares, you literally have nothing to worry about. You just hold the stock. You can even wait and just hold the stock itself. You don't even have to sell covered calls right away. But whenever you're ready, let's say that you want to create income, which for me, I usually do it immediately as soon as I'm assigned. Monday morning when I have my coaching session in my Discord community, I show all my live trades. I'm like, guys, we got assigned. Here's the strike price. Here's the covered call. Here's what we're going to do. That's literally how I make other people money. I make other people money by coaching them and showing them what I do for myself and how I have grown to 7 figures. And then I coach them and show them so then they can basically copy and do something very similar, but then also learn it on a deep level. So as soon as it's Monday and I get assigned, all I have to do is sell covered calls. And because Robinhood stock specifically, very strong business, very strong flywheel effect. I've talked about the flywheel effect a few times on this channel, but basically it's the effect that you acquire customers and then you get them from the top of the funnel. Okay, top of the funnel is like you get them in just to sign up, right? That's simple as that, right? They sign up. Adding more money, that's further down the funnel. So Robinhood is an expert at like getting you to open up an account and then to deposit money and then to use their services and then to expand, right? They're really good at that, right? They're not as good as another stock I cover on the channel, SoFi, which by the way, I've made an absolute killing on SoFi, like absolute killing. Like I need to go have some fun and rent a car or something here out in Eastern Europe and just have a good time because SoFi absolutely killed it. But anyways, for Robinhood, they have very low friction sign up. Their monthly active user base is 12.8 million reported users, right? That's what the press reported from their financial statement and their press conference. So basically almost 13 million active users. So that's very, very good. And they're continuing to expand. So when you do get assigned on the wheel strategy, essentially all you do is you hold the stock and then you go over to sell call. Now, you can sell calls. So let's quickly actually take a look at the chart for Robinhood. I just want to quickly show you some technical analysis, and we're going to actually try to understand for ourselves right now, kind of in more detail, where would be a good covered call to sell. Let's just pretend that you got assigned right now and you're wondering like, okay, well, where do I sell covered calls, right? You're like, what strike do I pick? What expiration do I pick? And all those other questions. Well, it's actually pretty simple. Like all you want to do, and I'm going to zoom in on this chart right now. I'm going to go to the 3-month chart. So on the 3-month chart, you can see here, there's a Bollinger Band here. I love Bollinger Band. I've been coaching and teaching Bollinger Band from the very beginning. Literally, I was first here on YouTube for coaching, and everyone else that uses Bollinger Band learned it literally from me. I just love Bollinger Band. I think it's the best. So for good reason, everyone else that teaches Bollinger Band, great. This is the best for a student to learn. Like, this is the easiest indicator. It's the best indicator, in my opinion, right? Like, I've been doing this for a very, very long time, and Bollinger Band really, really helps me understand basically, like, where do I see this stock headed next, right? It's impossible to predict the stock market in the short term. Nobody can do that, right? Like, even if you're a financial advisor, you still can't do that. If you're Warren Buffett, you probably still can't predict the short term. The market is only fairly predictable in the long term when you analyze a business on a fundamental level. Technical analysis can help you understand the range of where a stock can trade, though. So it is very useful. Although non-predictable, it's useful for understanding the range, like statistically, where is the stock likely to trade? You can see the top of the Bollinger Band is 154. So very, very simple. If you were to get a sign right now on Robinhood, you would simply sell a 154 covered call option. Now, we don't have that right here. There's no 154, so you basically would decide for yourself, well, hey, is 152 better or 155? Well, if you want a little bit more income, like you can see here, it's $9, you would want to sell the 152.5 because this would give you more money. So obviously, like, better to go for more money here in terms of income. But if you're pretty bullish on the stock, and I mean, if you're doing the wheel strategy, it's a bullish strategy. Like, you should be bullish anyways, right? So if you are bullish, let's say you're very bullish, well, then you would want to give yourself more upside. Right here, we have a 46 delta, which is actually like very high. So there's a very high likelihood of Robinhood reaching 152, especially because they have earnings next week, which I think is going to go very, very well. Same as I basically said with SoFi, I think Robinhood's going to do very well. I'll make a video on that. Like, just subscribe. I'll make sure to make a video on that before earnings. I'll tell you my thought process there and like what I think is going to happen, what I'm looking out for and everything. But look, because they have earnings, it could be smarter to go for 155, right? Just because you have more upside. So your total return is going to be higher if you go for 155 versus 152. So 152.5 right here gives you more predictable income by not even that much. Only, honestly, just $65, right? But 155 is higher, and you can see here the break even is also a lot higher. Like here, you're capped out at basically $161.98. But if you sell a 155 call, then you collect less premium, but it's higher. So you actually get the higher amount because then you're capped out at 155 plus the premium, which ends up being $163.53. So you end up making more money in the case of a bull run on Robinhood. In the case that it goes sideways, well, then it would be better to do 152.5 when you're using the wheel strategy. So really, when you're using the wheel strategy, you have to keep in mind that if you want to own the stock, it's good to go for higher delta when you sell puts, okay? Then once you get a sign on covered calls, it's better to go higher delta if you want income. But if you want maximum or more total return, you would go lower delta, right? Because 155 has a lower delta than 152, right? And 157.5 is going to have even lower delta. So there's nothing wrong with that either, right? You can go for 157.5. That's totally okay too, especially if you're bullish. Like if you're, analyzing Robinhood and you're using all my methods and you're like, hey, my belief is, right, everyone's going to have a different belief when they look at the chart. Everyone can interpret a chart pretty differently, right? We all have our own opinions, and that's a good thing. But if you're like, hey, I think the stock is going to go a lot higher than 154, then go for 157.5. You can even go for 160. So yeah, when it comes down to Robinhood, I think their international expansion makes them very attractive. Like they're expanding through UK, through Europe, and their international expansion is a trend that I personally want to be invested in. And that's why that's part of the reason why the stock is going up, as well as their cost of acquisition, their average revenue per user growth. So as this stock continues to do well, the wheel strategy can essentially help you generate income. Like I've seen students generate 10,000, 20,000, even more per month. It's possible depending on your portfolio size, right? The more you have in terms of funds and capital to work with, you just end up scaling. You end up building a bigger portfolio. And when you're using the wheel strategy, you should use it on multiple different stocks, right? So whenever you see me doing the wheel strategy, sometimes I make insane amounts of money on it. Like recently let me just quickly show you a quick position. I recently had iBit, right? So I ended up purchasing iBit and then I ended up doing pretty well on it. So I'm not up that much on it here in the stock, but the wheel strategy itself has performed very, very well. You can even see here how I've collected $38,700 by selling covered calls. So this right here is part of the wheel strategy. This is essentially what's possible once an investor builds up their portfolio, builds up their capital, and does the wheel strategy on multiple different stocks. There's a lot more that I can cover, but without getting into too much details, YouTube has been cracking down on option trading content, so I haven't really been able to even talk about everything that I want to talk about. So if you really want to level up your game, get the secret sauce, be coached with Uncle Henry himself, and just see my live coaching sessions, let's do it. Check out the first link in the description. It's a free consultation to just learn what my program structure looks like and how you can generate more income yourself. I think it's literally the best investment that you can make in your own education. But anyways, just learn for yourself, no pressure. Click the first link in the description and let's continue to make money. We made money on SoFi. Let's make some more money with the wheel strategy. Let's absolutely make money hand over fist, safely and consistently. Thanks for watching, and I'll see you in the next video.